Okay, hello everyone. So let's wrap up the week again as we do on a weekend, see how the swing days and the trade hours and everything panned out. So first of all, let's get me out of the way. Previously as well, I did mention that I've got some good news in a video where you'll be able to kind of like look at any asset you want to look at, and that's coming soon. Okay, as you can see here, I've done a software here which I'm going to integrate into the website, and as I integrate it more and more, you'll be able to see the calculations that I'm doing. So there'll also be like instructions on how to use this, and the advantage of using this is you'll be able to kind of like do it for whatever asset you want, and you won't be stuck just with gold, euro, dollar, Bitcoin, and the three major US indices that I'm doing, but you'll be able to do any asset that you want to do. Like I said, I'm going to give detailed instructions on how to use this as well in the members area. So this will really help you out because you'll be able to do your intraday timing, your vector days. Okay, in fact, we'll take a look at what our vector days look like and so on. In the interim though, let's take a look at what we had for the week of 18 to 22nd. For gold, we had Monday, Wednesday, Friday. Euro, dollar, Monday, Friday. These are the trade swing days. Bitcoin, Tuesday or Wednesday and Sunday. SP 500 Thursday. Dow Jones Wednesday. NASDAQ Wednesday. And also we had the vector days. Gold, Monday, Tuesday, weak, drained. Wednesday to Friday, strong. Euro, dollar, Monday, weak and drained. Tuesday, Wednesday, strong peak. When it says strong peak, obviously there'll be like buyers, or it'll be like at the top. I'm going to write a detailed manual on all of these once I finish the software. Bitcoin, Monday, shock day. The rest is routine. SP 500 is a routine week. Dow Jones, Monday, Tuesday, routine. Wednesday, Thursday, gains. Friday, drained. NASDAQ, Monday, Tuesday, routine. Wednesday, Thursday, gains. Friday, drained. Okay, so you can take a screenshot, see how things panned out. We're going to go over them anyway. Intraday. These are the intraday hours. As you know, they're UTC +3. So this is Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, I don't have a video for Friday because I don't work Friday. So sometimes there's a video, sometimes there isn't. Also, we're coming to the end of May. The swing day periods, if you remember, you already know them. The forward projections this week, I'm going to add the month of June, and that's basically it, right? So let's see how things panned out. I'm just going to take this, put this on this side here, and see how we go. Let's get into gold. So on gold, we had Monday, Wednesday, Friday. So as you can see on Monday, I did say, because we're down, buying the lows at trade hours is okay. I did say we still have some room to come down here, so you don't have to rush the trade. You can just wait, because what do we want to do? We want to use the trading day, the trading hour, plus the price at the same time. So if I'm not at a good price at the trading day or at the trading hour, I don't want to trade. Okay, well, this is how we filter a good trade or a bad trade. So as you can see, we're still not down here, but out of principle, what would you be doing? If it's a trade day, you'd be buying the lows. Okay, and Wednesday, as you can see, market went up a little bit, and we should be in fact going up here, but as you can see, the market closed below that. So I did warn you about that. That's a swing, and the market closed below that. So there is bearish sentiment in the market. So you have to be careful. The market can go to the downside. I also marked these levels. You're really going to like what I did with the calculations, because I can put any date and I can have a contra price to it. So if I had finished these calculators beforehand, we would have known that this was a zone we wanted to buy at. Okay, as you can see from there, the market took off. So we'll be doing all these kind of calculations, and it'll be automated. It'll just be like, here. Okay, so it'll be like good to just look at the software and then say, okay, these are the dates I should be looking at, these are the prices I should be looking at, and so forth. So that's gold. All right, so and then we had Friday as well. As you can see, the market didn't do anything. It was like inside week, as you can see here, or just all inside days, as you can see here. If we need the hours, how would that have helped us? Let's take a look. Now, Monday being a trade day, you want to be buying the lows, obviously. So the Monday trade days, let's put them up there. Okay, so we had 2:35 to 10 past 3. This is 2:35. 10 past 3 is there on this one. As you can see, the market going to the downside. I said it can stretch to 355. 355. That is your 355, ladies and gentlemen. Market turning around. Then I've got 740, 1115. 740 is there. All right, so 740 market starts to push up a little bit. 1140 is there. Obviously, you don't want to be buying around here. Okay. Why are you okay to buy here? Because this is the opening closing price. It becomes a support. And if you want to go up and the market's been above that as a trade hour, you could do that. You could even do that as well, because that was a trading hour. So if you missed it and you said, wait a minute, that's at the support, let's do it. What should you be looking out for? The thing you should be looking out for is, are there any gaps below, okay, where the market, are there any gaps below where the market can, like here, right? You see there's a gap here, and if I extend that gap, you see that's going all the way in there, okay? So that's a place where the market still has a gap, in fact, a little bit lower there, okay? But it didn't come back in any case. So knowing the hours is always a benefit. What's next? 1115, 740. 1115 was there. 740, 740, 740, 740. That's going to be 1940 my time. 1940 my time is there, guys. All right, and then as you can see, it's going up. And what did I say? If market is moving, should push to 10 past 10. So 10 past 10. 10 past 10 made another. This is 10 past 10, okay? So the market went up. 10 past 10 is here. So from there, it's still kind of pushed up to that resistance level there, okay? So let's see what panned out on a Tuesday. Trade hours 5, 7 to 7:15. So I had 5 o'clock. 5 o'clock is there. Market breaking down into 7:15. This is 7:15 there. And then I've got 8:30 to 8:40. 8:30 to 8:40 is on that same bar. 10:50 to 11:30. So obviously there are a few levels here, right? So which ones to trade? That's the question. 10:50. That's your 10:50, guys. Into 11:30. 11:30 is there. All right. So the market turns around here. As you can see, this is not a very good place to trade. You could have taken that one. Why? Because they bought there before the following day. So you could say, well, that's a support, I'll buy it and go up. And that's fine for intraday trading or whatever. You also have to understand that they're selling, okay? And you've got to cover your trade or manage your trade as you get to these price levels, right? And then we had 10 past 4. 10 past 4. Where are you? 10 past 4. This is 10 past 4, market breaking down. Beautiful. I can get rid of that. 10 past 4, market breaking down. From here, we can expect some volatility, I've said, until 6 o'clock. So some volatility, as you can see here, until 6 o'clock, and then the market kind of sizzling down. As you can see with the small bars, not a lot of action happening. And if the direction is strong, it should hold and continue to 10:45. Okay, 10:45 is here. As you can see, that was the impulse. Market moves up, continues in that direction. Let's take a look at Wednesday. Wednesday was another trade day, right? So on Wednesday, what did we want to do? Well, trade day, we're at the lows, so let's go to the upside. That was the idea. And Wednesday, so how to buy the lows. So if the market made a support before, you want to look for levels where the market can buy from there again. So what did we have? We had 530, didn't we? This is 530, guys. And as we get to 745, so 745 is there. All right, so I did say expect some surprise moves. Surprise moves did not happen, but at 745, we are still at the same place. Market turning around. If there is news, 245 can be a setup time. So let's take a look at 245. I didn't check the news, as you can see. 245, 245. Here is your setup. Okay. But expect sudden and disruptive volatile moves from 430 onwards. Let's take a look at 430. Where's 430? And this is 430 onwards. Okay, so you can see volatile moves happening here. All right, and then all the way to 1030, all the way into 1030. Okay, so this kind of information obviously is good to know. All right, and then we've got Thursday. Let's take a look at Thursday. So Wednesday, remember, we're looking to go up from the lows. Okay, now Thursday, we wanted to follow through. Okay, so if that's going to be, so we want to go up. Remember, we wanted to go up into that zone there to close that gap. Let's see what happened on Thursday. So where can you buy? I did mention this gap here as well, as you can see. So the market comes to fill in this gap here. Okay, that's the gap. So let's see. So that's technically a good price. What time on a Thursday did we have? So what time zone is this? This is 4:45. Did I have anything at 4:45? I did not have anything at 4:45. I had 6:30. Okay, 6:30. That's your 6:30 market going all the way up nice and easy. And between 9 and 9:45, well, target closing. So if it keeps going, it can go all the way into closing, but manage to trade at 6:30 and between 9 and 9:45 while targeting closing. So let's take a look at 9:45. Those were my comments, right? That's your 9 and that's your 9:45, right? So this is where the market started to stall, started coming back a little bit, but that's your closing, as you can see here. All right, so knowing these hours, like I said, it's like magic. Oh, excuse me. Let's take a look at Friday. Here we are on a Friday. Now then, what else do I have? Let's get rid of these, right? So Friday. Sometimes I've got these hours here. I will show you why. In a minute, I'll go back to that software I'm designing for you guys. If you follow me on Twitter, several months ago, you would have noticed started a 100-day Python course. So that's where we're at. And this is how I started programming everything, because I couldn't find a programmer to go through from A to Z, and not a lot of people understand what I do. So here's gold, right? Let's take a look at this. First of all, we had 215 to 315, so that's your 215 there, and your 315 is going to be just 4 bars away. Whoops. There. Okay, so that's your 315. Market sizzling to the downside, nice and easy. And then I've got expect impulsive moves as we get to 715. Where's that 715? This is your 715 right there. Okay, so market there. Impulsive moves coming a bit later on. 7:15 to 10 past 8. So that's 7:15, 10 past 8 should be around there. Okay, and then we've got next Hours 9:30. So where is 9:30? See, this is in the middle of nowhere. So you wouldn't really be trading around here. Okay, why? Because they sold up here, they bought here, right? So, you know, around here you're like in the middle of nowhere. Okay, so this is just gamble zone. If you want to sell, you sell the high. If you want to buy, you buy the low. Let's see if I had any hours at the place where they bought before. Let's see what time that is. 5 o'clock. I had 5:40. So at 5:40, you could have taken this trade. All right, why? Because they bought here before. Look, support, support. Okay, it's coming all the way from there. All right, so if you just, this is why I've got these lines here, right? Previous day low, comes back down to the previous day low. You want to get in, you can get in. Tight stop loss, okay? And then you can follow through, okay? And that's how it is. When you enter something like this, obviously you want to be targeting that zone there, okay? But with a one bar stop loss like down here, you can still cover the trade, take 1 to 1, 1 to 2 at least, and then push forward. And then I've said market should then settle down a bit and end at a target at 9:15. If you know 9:15 is kind of like a target, okay, then you want to definitely manage your trade around here, or when the market goes up to a place close to where they sold off or moved 1 to 1, 1 to 2, whatever, okay? But obviously knowing the hours, good for us. Now you could do this for anything. Also euro dollar. Let's take a look with the euro dollar. Now with the euro dollar, remember, I said we want to come down here. And the trade days were Monday, Friday. So that's your Friday, that's your Monday, okay? But on Monday, we were not down here. And you see how this bar closed the gap? Okay, so I did say we're expecting to come down here because of the gap and the goodbye kiss. So the market did that on Thursday. And on Friday, I did say, look, if that's the case, you can buy on a Friday at a low, okay? Where is a low? Well, you can, what do you have to do? You have to check those hours. Look, 5:40, right? 5:40 was an hour on Friday. That's your 5:40 hour, right? Why could you buy there? Well, look, it's not the best place to buy. It's not a line, okay? You see where they sold off at the lines? It's not a line, so it's not the best place. But if you wanted to, if you pushed your luck, which I don't like to do, mind you, you can say, well, this is a place where the market took off. They took off from here. And we're back there where they took off. See, that's an impulse push. So the market's thinking, let's do an impulse push. We did it before. So here is okay to enter if you're going to put a stop loss just under there. Why? Because if we made a mistake with timing, you don't want to stay in there anyway. And the same thing really for everything. Just look at your vector days. Also with the euro dollar, remember we had vector days where the market felt drained. Friday became a routine. And here we are. Okay, this is Bitcoin. Now on Bitcoin, I did say in the beginning of the week we could go up into there. Okay, and then this is the next, what is it, trading day? Wednesday, yeah? Monday, wait a minute, Tuesday, Wednesday, and Sunday. Okay, so we're going into Sunday. So that's your Friday. Today's a Saturday. That's Thursday. Okay, so that was unexpected on a Thursday. Let me see, was it? Monday was a shock day. Well, we didn't really have a shock on a Monday, but the market reversed to the upside. Okay, so that shock day is that one. Okay, this is Monday shock day. So the market did have a bit of a shock day to the downside. We had Tuesday, Wednesday turnaround day. I said this is okay to buy because we're at a place where we bought before and the trend is still to the upside, so we could get in there. And the market did go up, right? So Monday, Tuesday. So if we come here, this is Monday, right? Market makes a low, starts picking up. Tuesday, again from the lows. You could have bought where they bought before, trading hours, boom, okay? And then this is Wednesday, market goes up into Thursday. So if you bought Monday and Tuesday, you had like room to go up, and then wait a minute, and then here we are on a Friday. Okay, so Friday it just went boom to the downside, and this is Saturday, obviously. Okay, so buying Tuesday, Wednesday to the upside from the lows was okay. As you can see, Friday, not a good day. Monday, shock day. Yep, we got that right on the vector days, and so on. All right. Remember, with the Bitcoin, if you looked at my analysis, I said, on the bigger picture, we're coming down. So if you're going to buy, I said, you have to be cautious, simply because that's an impulse on a weekly, and weekly is the bigger fish. Big fish eat little fish. This is what we're following. All right. So if you went to sell it off on a Friday, what time did the market sell from the highs? Because this is Thursday. They started selling Friday, 7:15. Do we have a 7:15? We have a 7:15 right there. All right, that's the high of the day. 7:15 to 10 past 8. So that's the zone where the market sold off. What are the other hours? 9:30. Let's take a look. 9:30 is just here. So that's in the middle of nowhere. What else? Market can be pushy. If so, it should take us to 3 to 3:30. 3 to 3:30. This is 3 o'clock, guys. 3 to 3:30 is here, and the market's selling off again. If there is news, expect sudden moves until 5:40. So we've come down with the news into 5:40. Let's see where 5:40 is. This is 5:40 right there. And then, what did I say? Market should then settle down a bit and end at a target at 9:15. 9:15 was again settling down. Well, didn't settle down, but 9:15 became a trade hour again. So 9:15, market going down. Basically, impulse, pullback, impulse. So if you know your technical analysis, you're all good with that one. So that's if you sold, okay? And that's basically it. If you can just understand how these trading days and hours can work in your favor when you bring it together with your technical analysis. If you're just doing technical analysis without the timing, you're going to be stuck. You're going to be stuck in front of that screen looking for the setups all the time. So the important thing to do here is to make sure you get the time and the technical analysis price right together. And also here in the vector days, which I've designed for any asset that you can trade, okay? You can even put a custom one as well. So if you take a look at, for example, from the 18 to, let's say, this week, end of the week is 21st, you put your time zone in. This is important. I'll put major stock exchanges here as well, but you could just put a UTC as well and just measure your location. Then when you calculate, then it's going to give you, you can see here, it's going to give you these drain days, peak days with the date periods as well, with a bit of comment as well. So that'd be like good to have, as you can see. All right, so I hope that helps. See you guys in the next video. Have a great weekend.